This is part 3 for exercise number 4 on chapter 8. We're going to apply the concepts and prepare the entry for the write-off of a customer's account. On January 4th, Davidson Company received notice from one of its customers, Bryant Inc., had filed for bankruptcy. After several failed attempts to collect the balance due from Bryant, Davidson makes the decision to write off Bryant's balance of $4,200 using the following T accounts to prepare the entry to write off Bryant's balance. The balance and allowance for doubtful accounts and accounts receivable have not changed since the adjusting entry was made. Refer to the preceding section. If required, round your answer. Well, first of all, we're going to be debiting our allowance for doubtful account, and it has a current or a beginning balance. I think we have to go up here. Our allowance for doubtful account for Davidson Company was $65,925. So we'll put $65,925 here. I'm going to debit it for the $4,200 that Bryant owes. And I will now have a credit balance. If I take the $65,925 minus $4,200, I have $61,725. In my accounts receivable, the beginning balance was, what was my accounts receivable? $210,000. I'm going to credit it for $4,200 for that write-off, and my debit balance now is going to be the $210,000 less the $4,200 credit. So that's $205,800. Now, the allowance of doubtful account is going to be debited to the assets, so we're going to increase my assets, no effect on my liabilities, and no effect on my equity, and that's going to have an effect on the balance sheet. My accounts receivable is going to decrease, so that decreases my assets, no effect on liabilities, no effect on my equity, and that also appears on the balance sheet. What's the net realizable receivable after the write-off? Well, it's the same as it was before. It's going to be now $205,800 minus the $61,725. So it's a looks like $144,000. The place I'm getting this is I take the accounts receivable balance at the beginning, which was $210,000 minus $65,925, or now I'm going to take the accounts receivable of $205,800 and subtract the $61,725. So that gives me $144,775. Let me double check, make sure I just added that correctly. Before I go any farther, I'm going to check my calculations. So I'm good there. The net realizable value has no change, does not change as a result of the write-off. See, we've just identified one account that we estimated would go bad, the $4,200, but there's still all those other accounts that we're estimating, and we will, so it doesn't change after the write-off. Here we're going to apply the concept, prepare the entries for the recovery of a customer's account. On January 12th, Davidson receives a notice from Bryant Company that they are able to pay $3,360 of the account. If Davidson is willing to accept the amount as a payment, the entire amount owed, Davidson agrees, and the following day, $3,360 was electronically transferred to Davidson's bank. Use the T accounts to prepare the entries to recover. Recall that there are two separate entries. One, we have to reverse the amount, and then we have to record the collection of cash. So, cash is in the first entry, no entry made. Accounts receivable, we had a balance here an accounts receivable of $205,800. $205,800. And remember, I'm pulling that from the previous part of this problem. So I'm going to put that in. My allowance for doubtful account, let's go ahead and grab that balance, which was $61,725. So I'll put that in. Now I'm going to reverse the previously written off amount only to the extent that we're going to collect it. So I'm going to debit it, saying he now owes me $33,060. And I'm going to credit my allowance for doubtful accounts for $33,060. Then I'm going to collect the cash of $33,060. This is the second part of the entry. I will credit my accounts receivable for $33,060. And there is no change and no effect on the allowance for doubtful account. So now we can find our balances. I'll take my cash, $157,500, add the $33,060, the money we collected, and that equals $160,860. My accounts receivable, still, it was $205,800. Well, we increased it, but we collected, so the net balance there is still $205,800. My allowance for doubtful account is going to be the $61,000 or $617,250. I'm going to increase that by $33,060, and that equals $620,610. So now I'm going to show the effect on the accounting equation. Cash is going to increase. Oh, sorry. On the first journal entry, there is no effect, and no effect on my liabilities. My first journal entry is going to, let's see. Yeah, this is cash, and there is no effect on the equity, and cash appears on the balance sheet. In the second journal entry, we do receive the cash, so it's going to increase my cash. No effect on liabilities, no effect on my equity, and of course that's on the balance sheet. The accounts receivable journal entries, the very first one, it's going to increase my accounts receivable, which is an asset. No effect on the liability. No effect on my equity, because that's, of course, on the balance sheet, my accounts receivable. The second journal entry, my assets, accounts receivable, is going to decrease. No effect on the liability. No effect on the equity. Now on the third section over, I can't get to it on my screen, but for the allowance for doubtful account, the first entry is going to be a credit to my allowance for doubtful account, so that's going to decrease my assets. It will have no effect on my liabilities. It will have no effect on my equity, and it's on the balance sheet. The second journal entry has no entry, so it has no effect on any of those items, assets, liability, or equity. The net realizable value of my accounts receivable does not change. Does not change, because I'm still going to have my accounts receivable of $205,800 minus my allowance for doubtful account, which was $620,000. I take that back. It would decrease because we are decreasing our net realizable by the amount that we're putting back into the allowance for doubtful account. Yeah, it would decrease.